I'm joined by Devjani Ghosh, Rishad Premji, as well as Keshav Murugesh of NASSCOM. And this year, the guidance that used to be the norm for NASSCOM has been replaced by a CEO survey. Devjani wanted to understand what exactly led to give a direction in form of a CEO survey and replacing the guidance.
Yeah, the world and the landscape that we know is changing and changing pretty dramatically. The Indian industry has had a phenomenal year and is looking very, very strong right now. It's also an industry that is transforming very fast, and it's transforming towards innovation. It's transforming towards platformization, right? As we are in the midst of this transformation, I think the best thing for us to do is not apply the old lens that we have used to predict the future. It just doesn't make any more sense. So we are looking at understanding what should be the new indicators, what should be the new way of looking at this industry. And the best way to do that is talk to the people who are leading this industry. And that's why we've gone to the CEOs. We've done a pretty exhaustive survey in terms of understanding their sentiments on a range of topics. And the best thing we can do is present what the CEOs are thinking. And if you look at the survey overall, you will see that the CEOs are optimistic about 2019. At the same time, they are cautious too. But it's only right given all the changes that we are seeing around us. So it is, I think, the right time to take a look at what we have been doing, assess whether it still makes sense or not, because the world is changing so fast, and then figure out what is the right way to move forward.
I have just an add-on question to that. One of the data sets that were there in the survey also suggests that in the sentiment towards the next year, 51% CEOs believe that will be somewhat similar or somewhat lower. What exactly does that mean in terms of, what would be lower? Would the growth be lower, or would the domestic revenues be lower? Would the export revenues be lower? What exactly do these indicators mean?
I think you're talking about the economic indicators. They gave sentiments across different set of parameters, right? On the economic front, as you know, that we are expecting growth, but we are not expecting growth at the same pace, and this is economic growth, right? So that's where I think we had a divided house, where some CEOs felt it would be similar to this year, some CEOs felt it may not, it may be a little lower. You want to?
But she's talking about economic growth, not the business sentiment of the companies.
Okay. One other thing that I wanted to understand, we know that the economic cycle in the developed markets is peaking. How do you see some of the concerns that we talked about today, be it the US-China trade war or the Brexit, would really impact the growth that we've had through 2018, which was 9.2?
Look, I think we as a company, and I want to speak for the industry, have to watch out for uncertainty in the marketplace, and we've got to prepare for eventualities like all companies do prepare. And I think some of the things that are worth watching out for is the slowdown perhaps in the macroeconomy, which perhaps 2019 may not look as good as 2018, and we've got to be prepared for that. We've got to be prepared for the uncertainty of the trade impact. We've got to be prepared for uncertainty around mobility of people and the barrier issue that we talked about in terms of people moving from one location to the other. We've got to be prepared for Brexit. So we just have to take these things into consideration. Though despite all of this, I think, as we talked about in the press conference as well, there's a huge opportunity around the movement that our enterprise customers are on in terms of moving and driving their own journey towards digital and moving from this experimentation mode to being more and more sort of scaled and industrialized. And the fact that you have this demand opportunity, you have talent that you are building as companies and as an industry to avail capability to then address that demand, I think is increasing and gaining momentum. And so that just bodes well, whether we talk about 19 or 20 or we talk about the next 3 to 5 years, I think it just bodes well for the technology industry, and that's what we are most optimistic about.
You talked about the talent supply crunch. Just wanted to ask the last question here. When we look at the talent, there's a lot of attrition at the lower level jobs. However, we are talking about some of the specialized emerging roles in the market. What are some of these roles, and how is NASSCOM training or skilling people to be prepared for the future?
So there are two different questions there. One on attrition. Look, the positive on attrition can be there's a buoyancy in demand in the marketplace, right? That people are hiring and so people are moving. And that's one way to look at it. I think we talked about in the conference as well that the Future Skills platform is focused on 10 technologies, around 55 job roles, and 155 different skills. So it's quite varied, everything from cybersecurity to robotic process automation to AR, VR to 3D printing to analytics and the whole AI ML space. So there's a huge opportunity.
156 job roles.
156 job roles, right? I said 100. So it's a huge, huge opportunity from the technologies moving to the job roles, moving to the skills required. And so that's the focus of the industry, to try and build capability around those specific technologies.
Thank you.
Thank you.
Well, no concrete decisions, but nothing bad, and that the worst performer to the markets yesterday is not really reacting too badly, which is a good thing, and the markets are doing well for themselves as well. Thanks for tuning into Countdown. Let's pull up the heat map, let's pull up the Nifty chart and show you what's happening. Quite unlike yesterday, today we've started well and we've stayed well. I'm not placing any bets today, simply because yesterday I was proven wrong. But pull up the heat map and let's just see what's happening to the Nifty stocks, and then we'll talk about what's happening to the broader end of the spectrum. The commodity names, yet again, second day on a trot, are doing well. So Vedanta, Tata Steel, etc. having a good day in trade. JSW Steel incidentally giving company, so a couple of percentage points apiece for each of these names, actually even more for the likes of Tata Steel, or 3.5% higher. IT's not had a bad day today. Infosys 1.5%. A couple of other names which are doing okay, and TCS, despite all the murmurs of a large block deal likely to happen soon, is not really seeing any big bearish moves in the session today, just lying sedated about 0.25% in the green. So not a bad day for that one as well. Large ticks of green, lots of stocks contributing, 0.75% in the green. Not a bad day for the Nifty. One just hopes that this lasts, because the last few days, even though we may have started off well, we've only succumbed to some selling pressure. But if the large caps are doing this, what are the broader markets doing, Devina?
Well, actually, Anirudh, if you go to see the last few days, the broader markets actually managed to stay afloat in a pretty decent fashion. Today's session, taking a look at what the mid caps and the small cap indices are doing, they too are looking at a decent enough contribution coming in there. So starting off first with some of the gainers on the mid-cap space. So you've got Jindal Steel and Power, which is up about 6%. Edelweiss Financial Services, now the stock's up about 4%. This is, I think, the third or the fourth straight day that the stock has witnessed gains. So that momentum carries forward. PI Industries, Apollo Tyres up about 3.5%. You've got the likes of an Info Edge, which is up 3%. Sterlite Technologies are doing okay for themselves. What's losing out, obviously, on the back of the verdict from the Supreme Court with regards to Anil Ambani, all the ADAG stocks are down. So you've got Reliance Capital down 6.5%, Reliance Infrastructure 4.5% down. The others as well, Arcom, that comes into the smaller cap index, but that too is down heavily into the session. And Page Industries about 4.5% given up, and that's been the trend for Page over the last few days. Vakrangi is the other one that's losing out about 1.5%. On the small cap end of the market, which will come up on your screen, like I said, Reliance Communications, that's the worst performer. Kaveri Seeds continues to lose, second day on a trough, down 4.5%. Persistent Systems, Jet Airways, 2.5% given up there. Gainers, VIP Industries up about 5%. You've got ITI, Canfin Homes looking good, about 3.5%. Remember, these housing finance companies, particularly the smaller ones, Repco Home Finance, Canfin Homes, since end of December, the third week of December, had given up quite a lot of steam, but there's some amount of interest coming back into a Canfin Homes. Tata Lex is the other one that's down about, that's up about 3% in the session. That's the broader market space for you. But let's take a look at what's been happening on the futures and options side of things. Agam Vakil joins in for that. Agam, good afternoon.
Well, good afternoon. On the face of it, it may very well look like it's a bout of short covering. And well, this is largely on account of the kind of weakness that we've seen over the previous few days. And now we're seeing a little bit of a recovery. Are we expecting this recovery to last? That's a question, well, the traders are going to ask themselves. But open interest for now is up and about, so which means that at least at this point in time on an intraday basis, well, we have seen some longs coming through. Can this open interest number change tomorrow? That's something that I'm going to be watching out for. The Nifty banking futures, again, also seeing an increase of around 1 point. Okay, so now that's where you see that drop out there, 7% decline. So there's a clear case of short covering on the Nifty banking futures. Let's talk about the VIX. Has it fallen? Yes, it has. Down 6%, below the mark of 18. However, still above 17, and that means it's still in the danger zone. But when it comes to your changes in open interest, again, with different levels, you know, this is not unlike what we are used to, writing around the 10,600 put and, well, unwinding in the higher level calls. That brings me to the stocks which are in focus today. And right at the top, we have Kaveri Seed Company. It's come off from day's lows, but it is still down 4%, building on the kind of losses that we've seen yesterday. And on the short positions as well. Reliance Infra is the other one, which is in the F&O band right now, but there is unwinding taking place, so I reckon some of those positions are being covered. Page Industries is the other one, fresh shorts coming in through, even as the stock takes a knock of another 5%. And the final stock on my radar is KPIT Technologies. This is advancing by as much as 6%, so fresh longs coming in here. Once again, mixed cues from the broader markets, and it's anyone's guess where we're heading tomorrow. But for now, some respite for the benchmarks, well, given the kind of movements that we've seen in the previous few sessions.
All right, Agam, just stay on with us. The Indian IT body NASSCOM has revised its FY19 export revenue guidance upwards. This after its members saw robust deal flows over the last few months, but it stopped short of putting an upward guidance for the next financial year and put out the findings of the survey instead. Agam, tell us what exactly happened and what exactly came out from NASSCOM.
All right. So firstly, we have to understand that the industry and the way it gives out numbers is in exports and domestic. Exports is the more important number because about 70 to 80% for a lot of companies, 100% of their revenues come from exports, which is why while earlier in the year, rather last year, NASSCOM had guided for exports to be in the region of 7 to 9% growth. At this point in time, they are suggesting that the growth will stand at around 9.2%, which is higher than the upper end of the range, and that of course is a big positive. As far as domestic growth is concerned, again in terms of guidance, it was around 7 to 9%, and that is exactly what we're expecting, bang in the middle of that guidance at about just short of 8%. So when it comes to exports, it certainly is a good trend coming through. Now moving on to the next part, and again this is where we have to remember that this time around the industry body has not given us a guidance, but instead of that, what they are giving us is the results of a survey that they held with about 100 CEOs about what they expect with respect to growth. 50% of the CEOs polled in this survey are of the opinion that growth will be better than what they have seen in FY19. The other 50% suggests that it may not be as good. So again, it's a split vote, and again, it will also matter from company to company and the kind of exposure it has to various verticals as well as various geographies. I just want to point out to the story that Bloomberg Quint did about a couple of weeks ago, where their revenue growth on a year-on-year basis for Q3 stood at around 18%, over 18% in rupee terms. And this was the highest year-on-year growth that the industry has seen. That is the aggregate of the top 5 companies in 18 quarters. And of course, this is perhaps what the companies are suggesting, and that's of course your growth in the top 5 companies. So as far as FY19 is concerned, above expectations, it remains to be seen how the upcoming financial year turns out for the industry.
All right. Agam, thanks a lot for that. Moving on then, the Supreme Court has held Anil Ambani and 3 Reliance Group companies guilty of contempt. The 2-judge bench hearing in Ericsson case has ordered Reliance Communications to pay up to 450 crore rupees within the next 4 weeks, else Anil Ambani will have to serve a jail term. Arpan Chaturvedi, who was in court when the judgment was read out, has this report.
Well, some very strong words in the judgment today against the ADAG group and Anil Ambani. The Supreme Court said that the attitude adopted was a very cavalier attitude. It came in the way of administration of justice, and the court has held Anil Ambani and the 3 ADAG group companies guilty of contempt, and the court has said that this contempt needs to be purged, and the way to do it is that they will have to deposit 453 crores in the top court within 4 weeks, and failure to deposit the money will result in a 3-month jail term for Anil Ambani. As far as the other group companies are concerned, the 3 ADAG group companies will have to deposit fines of rupees 1 crore each, and the failure to deposit that fine will result in another 1-month jail for Anil Ambani. So that's the crux of the Supreme Court order that has been passed today against Anil Ambani as far as the dispute between Arcom and Ericsson is concerned.
All right, and the next And then look at what steelmakers are doing. In today's session, they are up and about after the Indian Steel Association proposes safeguard duty on all steel imports. The industry body has approached the Steel Ministry with the draft proposal. Nikki Mirjani joins us with the details. Nikki.
Well, Neeraj, the entire metal pack as a whole is, if you see, there's an uptick on the screen out there. But specifically, if you look at the steel stocks, they're topping the chart right now. For a couple of days, there has been a proposal which has been offered by Indian Steel Association, which in turn has proposed the Ministry of Steel to go ahead and impose minimum import price on steel products. And for HRC, the proposed MIP stands at around $650 per ton, which is adjusted for a $170 per ton cost escalation, given the kind of raw material prices uptick that we're seeing recently, be it in terms of the iron ore prices that is expected to percolate down on the finished products and in turn make the production a little more costlier as compared to earlier for steel makers. How would that help these companies? Proposed MIP could actually go ahead and lift local prices by as much as $3,000 per ton, which is an extreme positive step, given that the HRC prices in the month of Jan-Feb were trading around that one-year low level. However, an Investec report suggests that the timing of this proposal could be questioned, given the spreads of these steel makers. They remain considerably at a healthy level, and there is at this point of time no evident stress which is seen on their balance sheet. So obviously the viability of this proposal is also questioned. But just to give a little background of where this proposal is coming down, if you remember in Q3, all the steel makers went ahead and slashed their guidance or the outlook, sales volume outlook for FY19, and they suggested that there was a demand dip that they saw particularly in Q3. That was mainly on account of higher inventory buildup along with the imports that were booked in the quarter, which are impacted the outlook. The cuts that could be seen, JSW, it was a 3% sale to the similar quantum. JSPL, which is actually majorly dependent on export, also revised its outlook, or rather slashed down its sales volume by as much as 24% to 5.3 MT as compared to 7 MT. Back to you.
All right, Nikki, thanks very much for that. On to another pocket, and that's the sugar space that's been relatively active over the last few days. CRISIL believes that the hike in the minimum selling price will help the operating margins of sugar millers by about 300 to 400 basis points. The additional liquidity, along with the rise in international prices, will reduce cane arrears by 18% this season. Let's discuss the report in greater detail with Hetal Gandhi. She's the director at CRISIL Research. Hetal, thanks very much for taking out the time. Just highlight for us the key aspects of the report in terms of what you've put out and the kind of benefits that you expect the sugar millers to gain from this MSP hike.
Sure. So I think the increase in the minimum support price from 29 to 31 rupees is what is going to benefit millers. We believe cash flows for millers could improve by around 3,200 to 3,400 crores, and that will support in reducing the cane arrears. Plus, the international production is expected to drop by around 5 to 7%. That is because Brazil, which is the largest producing country, is expected to see a sharp decline in sugar production. Now, this will also benefit those exporters who are set to export. We are expecting close to 2.5 million tons of sugar being exported by the end of the year, sugar season. So that will again benefit. So a total cash flow benefit of 3,400 to 3,600 crores is what we are expecting. And this in turn will bring down the cane arrears to around rupees 165 billion or 16,500 crores from the high number of 20,000 crores that we are talking about today.
So what do you expect realizations to look like post this MSP hike? And let's break it down into different regions of India.
Sure. So what we believe is that the market realizations were already trading higher than the 29 rupees when the support was being announced. We believe realizations would be close to, or the prices at which sugar will be sold would be close to 34 to 35 rupees for the northern-based mills, and a notch lower, 30 to 32 for the southern-based mills. And that is going to have an impact on profitability. If I look at profitability, it will be a little different for integrated versus non-integrated players. We believe non-integrated players would either break even or make single-digit margins of 1 to 2%, because generally sugar margins are actually lower than the other segments. And if you look at integrated players, they could make EBITDA margins of almost 13 to 15% as compared to 9 to 12% that they are experiencing today.
Interesting. Would you believe that the counter cyclicality that the industry can have right now compared to the perennial cyclicality, if I can use that term, that the industry has been used to, would lead to maybe some more consolidation stroke expansion within the industry? I don't know if capacity expansion could happen, but despite this up move happening, there are a bunch of companies which are still reeling under pressure because of the excessive debt on the balance sheets. Have you done any work on that, and what's the resultant outcome?
Sure. Credit profile of sugar companies has definitely remained under stress. If you look at the CRISIL rated portfolio, the upgrade to downgrade ratio has been around 0.3 times, which shows that downgrades have been higher than upgrades. And that has been because of A, rise in working capital requirements because of the high cane arrears. B, also because a number of them have been in the capacity expansion spree. So if you look at the incentives which were being announced over the last 5-6 months, I think the one that has really picked up is the 4,400 crores soft loans that the government is providing for setting up distillery units, where ethanol based manufacturing capacities, support to that is what players are looking at. And today the capacity of that kind of a production is around 2 billion liters. If you look at the kind of capacity expansion plans or submissions which players have done to the government, it is equal to that existing capacity. So that's a huge chunk, and almost 160 applications are today with the government at various stages of approval. We believe and our interactions indicate that players who have a stretched balance sheet may not be able to get the right loans, and therefore we are expecting that only 30 to 40% of this capacity would actually go on finally for doing the capital expenditure. But definitely, with the prices increasing and EBITDA level margins improving, export also seeing a bit of a better recovery than what it was, we believe that there will be enough room for players to go at least for that much capacity expansion in the distillery space.
Okay. Yeah, well, some of that has been announced as well, and therefore I don't know if you look at say the next 18 odd months, do you reckon that both the balance sheet and the profit and loss account strength could improve meaningfully from where it is right now? Because the balance sheet was in distress. Now we have some bit of break even, as your report also suggests, on the margin front. And if indeed the ethanol business contributes even more meaningfully with a higher capacity in place for a lot of players post 2019, that only adds to the cash flows for these companies. Do you envisage such a scenario?
Right. So what we believe is it's not going to be the best scenario for the sugar industry. From the current credit profile that they have, is there going to be an improvement? The answer is a yes. Nevertheless, if you look at the cane arrears situation, even at 165 billion rupees, it's going to be much higher than the 90 billion rupees which was experienced in the last 3 sugar seasons. Unless and until that is corrected, and we believe there will be more measures from the government that would be needed on that front, we don't see the credit profile returning to or turning out to be significantly favorable.
Just comment on the outlook in terms of sugar production. While for this particular year, for FY19, NASSCOM has estimated about 30.7 million tons. The last 2 years have been significantly higher in terms of supplies versus an average of about 26 odd million tons. You think that this trend is likely to continue, or you may actually see it reverse back to these levels of 25, 26?
I would not say an immediate revision to 25, 26, but definitely it will start coming down with the kind of issues that even at farmer level they are facing. Nevertheless, it continues to remain amongst the better profitable crops. but there is a lot of money that is stuck on the working capital side, and which is what becomes a cause of concern. What we believe is that structurally coming down to those levels may take time, because you have also looked at yields improving significantly, or higher yielding variety being a kind of a norm for the last 2-3 seasons in Uttar Pradesh. So coming back to the previous levels of 24-25 might not be an immediate reality.
All right, got that. Hetal, thanks very much for taking out the time. Really appreciate you joining in this afternoon. That's Hetal Gandhi of CRISIL on their report with regards to sugar. And keeping it with the topic, with the hike of the minimum selling price of sugar to 31 rupees per kg, that's a big step in the right direction and will go a long way in terms of stabilizing margins, according to Narendra Murukumbi, co-founder of Sri Lanka Sugars. We spoke with him earlier this morning. Listen in.
Historically, we've had volatile sugar prices, and there has been a constantly rising raw material price. And we have been agitating to actually link the raw material price to the finished product. Now, not having managed to get a market price on the raw material, we've actually managed to convince the government to have a fixed price on the finished product. So finally, we have that constant margin business which we have been agitating for. And that's actually the biggest fundamental change in the sugar industry in the last 2 years. This government has managed to stabilize the margin despite, as Vivek says, some of the largest surpluses we have ever seen in this industry. And as long as that can continue, and that will continue until the surplus is unbearable, I think we have the industry is in a sweet spot. We finally locked in the margin between raw material and finished goods. As you see, whatever was the increase in the FRP for sugarcane this year, we've got a corresponding increase in the sugar price. That is why margins are looking very predictable. Ethanol, etc., are all secondary in my opinion. The biggest success of this policy has been to stabilize the sugar margin itself.
While you're talking about this, I think you indicated that you had spoken to the management of Dhampur Sugar earlier on, and while their realizations were somewhere closer to 29 rupees, with the MSP at 31 odd rupees, there's not going to be much of a material change for them in terms of realizations. Does that happen, or you think that there is going to be a big material change?
I think in this case, the 7% increase in price is going straight to the bottom line. So if you talk of a business which has a EBITDA of 10-12%, another 7% is very significant.
So currently, right now with the MSP at 31, is it comfortable to cover most of the costs there? Or you feel that it could have been slightly more higher? Which is probably something that millers would even look for.
I think the industry was asking for 34, 35, but the fact that it's kept pace with the increase in cane price this year is quite encouraging.
So the differential has been taken care of, according to you?
Yes, according to me, yes, largely.
All right. Just to get in a sense from you, like you said, the ethanol aspect is the secondary aspect to it. It is nonetheless a very high margin business for most of the sugar manufacturers if they actually go into it in a big way. But when do you actually see it gaining that kind of momentum that people are anticipating it to gain? Because up until now, once the ethanol announcements were made, that excitement kept investors coming into these sugar counters, hoping that they'll start ramping up and they'll start ethanol production in a big way. Are you seeing that happening anytime soon in a material fashion?
So I think there it is more selective. To have a substantial effect on the combined bottom line of a sugar company, you need much larger ethanol capacities per company, and only some companies are in the position to make that. I feel 5,000 to 7,000 crores of capex is currently going on in terms of new ethanol capacity. The companies who are doing that will start showing a significant increase in their ethanol production and margins, contributions in the next couple of years. But it won't be across the industry because as I said, it needs a lot of capex to make a significant dent.
The unknown entity out here, everything else is subject to an Excel and the kind of numbers that can come in. But the unknown entity is what happens to output. And all through the last 6 months, everybody's been talking about how the output numbers seem very high right now, but if the globe were to contract and exports were to happen, and therefore Indian output also could contract because of weather conditions, we already have seen fickle weather. So the first question, Mr. Murukumbi, to you, and then the same question to Mr. Saraogi as well. What is your gut sense of what happens to output over the next 18 months? Does it come off materially, or is it a very difficult question to answer, and let's not get swayed by predictions that come in every second month?
No, I think it's fairly clear that in India next year we will have a lower crop.
Okay.
Also for the new Brazilian season of 2019, which starts in April now, There also cane is lower than last year. How much sugar is produced, whether it's more or less than last year, will be dependent on the relative prices of sugar and ethanol. With oil prices upwards of $65, even there we have a fair kind of bottom for the world sugar market at around 13-14 cents. So India, I would expect about 4 million tons less, largely due to reduced planting in Maharashtra and Karnataka.
All right, that is Narendra Murukumbi there talking about the industry as a whole and how this increase in MSP has provided a good enough fillip for the industry. Let's talk more markets now. The markets have actually come off from the highs of the day. So for the index right now, should pull up the Nifty, we're actually up 0.5%, but considerably off the day's highs. 10,654 is where the Nifty is at. The Bank Nifty, that too has come off the highs of the day and now trades higher by about 0.4%. Individual counters, Bharti Infratel today, from being the top gainer in the last few days of trade, is now the top loser. Dr. Reddy's also down 1%. Hero Motocorp down 1%, Z is down as well. Bajaj Finserv, ITC are all the losers. Amongst the gainers, metals are looking firm today, so Vedanta is up about 3.5%, Tata Steel moves up 3.3%, Hindalco is up 2.5% as well, and some of the oil marketing stocks, oil and gas stocks, so ONGC, GAIL, HPCL are all active in the session this afternoon. Let's bring in Manav Chopra of Indiabulls Ventures. He's joining us on the show right now. Manav, good afternoon to you. Let's talk a little bit more about your index call and what does it look like? I mean, the last few days, the second half of trade particularly has dampened the sentiment where we've reversed gains of the early morning. Today's session, we've started doing that. I don't know whether we'll manage to wipe out all the gains that we have or just about hold on to some.
See, the markets recently have witnessed a series of decline from its recent peak of 11,100 and there has been no respite from its recent fall. But one important observation, the prices have actually tested its important support levels, and the risk-reward ratio seems to be very favorable for going and taking long position at the current zone. Also, a consecutive series of more than 8 days of decline usually results to a good pullback rally as per the previous data, and also the oscillators are bouncing from its oversold levels. So I sense in the near term one can take a contra move at the current zone, and we believe that 10,600 on the Nifty would be an important support. So 10,550 could be a stop loss on the lower side, and the immediate retracement rally could be towards the levels of 10,850 and eventually even 10,900 seems to be quite likely. For Bank Nifty particularly, this index has managed to sustain and hold above its long-term averages and has been consolidating and hovering above the 100 EMA, which is a positive signal. We've also seen a positive breath coming in the banking space. So I sense, since the expiry is tomorrow, there could be some sort of a volatility, but 26,600 is an important support and would be the stop loss on the lower side. And once if the index breaches the resistance of 27,000, eventually we could see the rally towards 27,300 and 27,400 in the near-term perspective.
Okay. Those are the index calls. Let's welcome in Nipun, Mehta, market expert, who's joining in right now. Nipun, good afternoon to you. What's the view right now in terms of the overall market mood and sentiment?
Good afternoon. I think till the sword of as far as the geopolitical issues or geopolitical action that could happen is concerned, I think markets will continue to be nervous, and that's, I think, the prime factor which has been clearly acting as a serious pressure as far as markets are concerned. One must remember, of course, that post any such geopolitical action, when you look at it from a 1 or 2 year basis, historically the markets tend to go significantly up, virtually sometimes in a V-shaped there. But while this kind of or any kind of geopolitical action is taking place, economy does take a hit, whether it is deficits, whether it is potentially inflation, the kind of expenditure on infrastructure that could otherwise have happened within the economy, that goes for a toss. that moves towards defense. So a lot of the developmental activities that the government might have clearly get sidelined. So yes, in the short term, there could be that impact, and that's what we are seeing in terms of nervousness as far as markets are concerned. This could just continue for some more time. Technically, you might have pullbacks. Technically, you might have an oversold position. You might see about a short covering because of which markets might pull back a bit, and you might see those events. But very clearly, I think the nervousness will act as an overhang as far as markets are concerned, at least in the near term.
Okay. Nipun, good afternoon. There is some bit of traction that we are seeing over the last few sessions into companies which were beaten down badly. Do you think this is more a dead cat bounce of sorts, and troubled balance sheets would not be out of the woods as of now?
So, good afternoon, Neeraj. 2 or 3 observations. One, I think that kind of support at lower levels against a lot of these fundamentally good stocks, so to say, where there hadn't been any corporate governance issues, where the results were improving quarter on quarter, but the stock prices had eroded anywhere from 40 to 70%. Clearly, there we are seeing support at lower levels. That's a potential indicator that the worst might be over as far as the wealth destruction or price erosion is concerned. Doesn't necessarily mean that you could see a significant bounce back. Balance sheets for a lot of these companies, at least where results have been fairly consistent and the balance sheets hadn't been over leveraged, they are improving. The stress is going down. Overall, as far as corporate sector is concerned, I wouldn't, of course, say that balance sheets are getting deleveraged. I think it's to a very limited extent that you're seeing deleveraging. So, which is the reason very clearly you are seeing the premium for under-leveraged balance sheets or cash-rich balance sheets. The other point, of course, is that the premium mid-cap, the premium of mid-caps over large caps, in fact, has gone negative when you look at both the indices and the kind of premium that one used to see of mid caps over large caps, even small caps on a lot of occasions over large caps. That is not just narrowed, but it's actually gone negative. If you look at a 3-year or 4-year chart, you're actually seeing the mid-cap index lower than the large-cap index in terms of movement. So the premium is completely gone, and that's gradually getting that's showing up in terms of while on the large-cap side, you're seeing those 8 or 10 stocks quoting at a significant premium to the other large caps. That's what you're gradually getting to see or likely to see as far as mid-caps are concerned, where there could be a significant premium over the laggards within the mid-cap space. So yes, our sense is probably the worst might be over as far as some of those mid-caps are concerned, but you might not see a significant bounce coming back.
Okay. Few other stocks to watch out for in this session, and I want to pull up Vedanta, which is now in the last 7 days gained about 4.5%. Adani Ports has suddenly shot up too. Adani Ports is now up 4.5%, and the move has come in the last few minutes of trade. So that spike that you're seeing on the counter pushes the stock up 8% over the last 7 days. Manav, a quick check on both Adani Ports and Vedanta.
See, Adani has actually also closed above its important 100 EMA and has also was earlier facing resistance around the levels of 350, which it has surpassed. The volumes are also looking quite well placed at the current zone. I sense one can see a follow-on move for next couple of trading session, and initially could see the levels of 365 to 370 on the upside. Vedanta, has witnessed a series of decline recently from the levels of 200, and it is bouncing from its oversold levels. Eventually, I sense this bounce could just play off towards the levels of 165.70, but there are a lot of stiff resistance on the upside. So if I have to pick one of these, I would probably go with Adani Ports, since the momentum is quite positive, but Vedanta could still continue to face stiff resistance at 165 to 170 on the upside.
Okay, let's also run through some of your stock ideas. You are looking to buy an ICICI Bank, Manav, and you're looking to also buy Ambuja.
Correct. So ICICI Bank has been, forming a strong support around the levels of 335, 340 on the lower side, and eventually, whenever the prices have tested the support zone, the stock has also rallied by 5 to 6% in next few trading sessions. So we have seen a test of the support levels, and the prices are consolidating at the lower end. We've seen a good intraday breakout yesterday, and the prices are still managing to hold the support zone. So overall, the structure still looks positive on ICICI Bank. We recommend a buy into this with a stop loss of 335 for an upside target of 365. Ambuja has also seen a very good bounce. In fact, on the daily chart has formed a double bottom pattern with a good bullish formation at the lower end. And it's like more or like a contra play since the prices are bouncing from its deep oversold levels. For Ambuja, it has a strong support at 200 on the lower side. 198 can be the stop loss, and we expect an upside target of 220.
Since we're on the topic of charts, something that we highlighted early this morning on Bloomberg Edge, the technical indicators on Minda Industries turning positive. Followed that call, you would have certainly made some money. This is not to pat our backs, but more importantly, revisit that call to try and figure out what were the indicators that led Yash to believe that this stock could have an edge today. Yash, what was the pattern that the Bloomberg terminal had thrown up on Minda Industries?
Good afternoon, Neeraj. So we were tracking Minda Industries in the morning, and we had given a buy call on the back of the bullish engulfing pattern that was formed. So basically, it was the formation of this big green candle right after the red candle that we saw in Monday's day of trade. And with that up move, we saw that it almost filled the gap that had been formed following that big red candle earlier last week. And with the last 4 or 5 days' move, it had moved back to the levels last seen when it had seen that big fall. So based on that, we were bullish, and the stock moved up. It opened gap up and went up as much as 15% in today's day of trade. We had additional confirmation coming in on the longer term charts as well. So we looked at the weekly chart over the last 5 years, and we were referring to the RSI. So the lower panel over here, that is the RSI, and again, it had formed a double bottom there. So it came very close to the oversold mark, which is the mark of 30, the green line. It was about 31 or 32 in the morning, and it has shot up significantly following today's move. So Minda Industries need to watch out.
Well, certainly the stock has reacted really well in the session today. Let's wait and watch. Do tune in at 8:50 a.m. every day, wherein we try and get you these indicators that the Bloomberg terminal throws up. These are not buy or sell calls by any stretch of imagination. This is more a direction and a possibility that the Bloomberg terminal throws up and we bring to you. So keep that at the back of your mind. But a big up move today there, Manav. Minda Industries, any thoughts?
Yes, in fact, the prices have also breached its important trend line resistance drawn from its recent peak of November 2018, and it also confirms at least a short-term trend reversal. Most importantly, Neeraj, the kind of momentum that we've seen in the stock today and yesterday, backed by very strong volumes, it is definitely indicating for a range shift, at least for a near-term perspective. May not have a very good risk-reward ratio for an entry at the current levels, but on the lower side, the stock will have a strong support around the levels of 300 to 305. I sense after such a strong move, the price usually consolidates or retraces a bit. Any trader can look to initiate close to the levels of 300, 305. But from here on, will not be surprised to see a follow-on move, which can take the prices towards the levels of 355 to 360.
All right, that's Minda Industries for you. 320 on the counter. Yesterday itself, the stock began its up move, and today you're seeing a follow-through of that up move coming in. Very strong on that counter. The other ones that you could probably look at is an Indiabulls housing, which again is one more stock which is in the last few minutes of trade picked up pretty smartly. 640 now on this stock in the last just the last few minutes of trade. So it's surpassed Vedanta now and is one of the top 2 gainers on the index. Nipun, for most of these housing finance companies now, have things improved materially according to you? And are they worth an investment?
Well, if one looks at it from an asset quality point of view, I think there were almost no issues as far as housing finance companies are concerned. I think the issue was more related to growth. It was related to interest rates not supporting the entire space. It was obviously related more to the fact that the overall real estate space itself was or continues to go through very challenging times. And really the demand for housing finance companies comes in more in the affordable housing space or the absolutely smaller house sizes that are there. So clearly demand had been impacted. Our sense is probably this is something that could continue for some more time. You continuing to see those smaller houses or within that affordable housing space, within the ticket size of 10 lakhs to 40 or 50 lakhs, continuing to attract a fair amount of demand. And that's where a lot of the housing finance companies seem to be looking at in terms of catering to that kind of a pocket. So the top line growth has clearly got impacted. Our sense is it will probably still take a few quarters for that top line growth to come back for margins to be coming back to normal, for profitability to be coming back to the original levels. But when one looks at the asset quality, I think that's where, in comparison to the banking sector or the PSU banking sector, they've had an edge. I think the overall NBFC space has seen that as a positive in comparison to the banking space. So yes, housing finance companies look to be good, but they could just be market performers or at best market underperformers, at best market performers. We don't see a significant outperformance coming in from this space, at least in the short term.
Okay, Nipun, stay on. We'll just get back in moments from now. Would want your thoughts on this particular pocket as well. Aarti Industries, that's the management in focus today. The company has entered into a multi-year deal worth $125 million with a global chemical conglomerate. Let's discuss this in greater detail with Rajendra Gogri, the CMD of the company. Mr. Gogri, good having you. Thanks for joining in. And congratulations on this deal. This is what, the third such deal that you've entered into?
Yes, yes.
Okay, can you tell us some details about this, and is this different from some of the others? Because I believe the earlier ones that you've entered into, the duration of the deals has been even longer than 10 years.
The first one was 10 years, the second one was 20 years. This is for 10 years, and this is a little bit different type. We were working jointly with a global company to develop the product to meet the quality also, and make a commercially viable process. And based on that process which has been developed, we are putting up the facilities.
Okay. What happens? What does this deal mean in terms of annual revenues? I believe, is it split equally over 10 years? And if so, please do clarify on that one. And what would this mean in terms of the investments that you have to make? I presume you mentioned that you will have to make the investments for this after you entered into this deal, or after the deal has actually been structured, which is now.
Yes, yes. So total sales is expected about $125 million, and on an average about $12.5 million. More or less it will be spread equally over the contract period. And total investment is expected to be about $15 million. But this being a multi-step process, overall EBITDA is expected to be around 35%. Which is significantly higher than our normal business EBITDA is around 20%.
Yeah, and is this EBITDA of 35% also higher than the EBITDA of the earlier two such deals, Mr. Gogri?
Yeah, the first one was about 40%. And second one was more of a different kind, where the entire financing was done by the party with whom we had done contract. So it was a different type where there was no capital employed.
Okay.
So, yeah.
Okay. So now that you've made a bit of a habit, and I see you amongst the only ones within the Indian landscape, at least, which is entering it, a company which is entering into such deals. What is it that is aiding such? Would you make more such moves? And do you think the industry itself could be moving to such a structure wherein you jointly develop, jointly try and develop a product for the customer and enter into these long-term deals? Or you would continue to remain one of the few ones who does this?
We have been having a multi-year relation with a lot of global multinational in various end-use industry, whether it's specialty polymer, agrochemical, dyes, pigments, etc. So we are leveraging on these relationships, and also India is becoming a more cost-competitive destination for contract research as well as the chemical manufacturing. So that is the reason we are able to enter into this kind of deals. So it's both customer relations and cost competitiveness, and also our manufacturing and R&D skills. So these are the three factors, which is leading to that. But in general, there is Easternization is taking place, and now India is become more competitive than China. So I would say, this kind of possibilities are there for other companies also.
More such deals in the offing, Mr. Gogri?
No, in general, as I said, this is the tendency for a lot of multinational to, enter into a long-term sourcing for their, key supply chain and intermediates. So it will be always our endeavor, to get into this kind of relationships.
Okay. Okay. So let me try and get a sense of what does this do. I'm guessing in a manner of speaking, this is while it's organic in nature, but in other parlance, there is a normal business which is going on, and then you're entering into such deals which give consistent small amounts every single year. What does this do to the overall growth trajectory for Aarti? Does it take it to another level, or this is more a buffer for you to ensure that you continue to clock the 15-20% numbers that you have been doing in the past?
No, our normal business model, where we have a integrated chain, and so that we are looking at it continuously for expanding based on the global as well as the Indian growth, and adding new products there. And in addition to that, we are looking at this different vertical where you can develop more jointly for complex chemistries and partner for long term. And also third vertical will be more of, manufacturing partnership also. So two different additional for growth in addition to our normal business model, which is of an integrated product line.
So what does this do to the numbers then, Mr. Gogri? Does it remain at the steady state that you have been in, or do these deals, as they bunch up, adds much more teeth or percentage points to the numbers?
Yeah, obviously it will increase.
How much?
Because then so there will be a continuous effort. We'll not more and more opportunities are there. We'll go on capturing. So we'll try to source also more opportunities with the customer. And I think that this can really strategy we feel will be a good accelerator.
Congratulations on this deal, and thank you so much for taking the time out and speaking about it. That's Rajendra Gogri of Aarti Industries. Nipun, how do you view, such a thing? Commodity chemicals might be cyclical. Specialty chemicals are not quite cyclical, and add to that, now a company like Aarti is actually adding 10-year, 20-year deals. Quite interesting. We had seen this happening in IT, wherein long-term contracts were entered into. Now it's starting to happen in yet another export-oriented industry.
So clearly, companies like these look to envision a longer-term future and visibility as far as revenues are concerned, as far as these products are concerned, and that's why I'm getting into these kind of business models. Obviously, not very common within the industry. But I think clearly the pricing power is there as far as some of these products are concerned, particularly specialty chemicals. I think it started off probably with a game on pollution control, but gradually you are seeing a lot of increased awareness as far as Indian companies are concerned, as far as this is concerned, as far as pollution control is concerned, and incrementally with research, with increased demand from the global space, you're clearly seeing improved pricing power. So while you've had some of these companies probably over the last couple of quarters not growing at the same pace that they were growing earlier, our sense is overall the specialty chemical space does look good when one looks at visibility with a medium to long term. On a medium to long-term basis, both in terms of top-line growth as well as profitability being maintained at the levels which were there maybe a couple of quarters back.
Okay. Okay, Nipun, I just want to wrap up this discussion with one small question. The haloed names have now started to come off in a meaningful way. I mean, what's happened to Eicher, Maruti, etc. is separate, or MRF, for example. But Avenue Supermarts, 15-18% from its recent highs. Page Industries today, this is the fifth day on a trot that Page Industries is correcting, and it's now closer to the 20,000 level, 2644, another 4.5% gone. The last 7 days, it's lost about 13%. Is this very company specific, or do you believe that high valuations in consumption-oriented pockets might take a beating?
So I think it's been across several of you mentioned 3 or 4. I think you could include Bosch, MRF. Yes, of course, you mentioned Page, Eicher. A lot of them have actually seen this kind of price movement. I think expectations on the kind of growth that they should have been fairly high, and which is the reason why you've seen fairly high valuations. So in virtually all of these companies that where this kind of a price correction or dilution has come by, very clearly the growth has been only marginally lower than what it was. If you expected a continued 15 to 25% growth, you probably had it at the lower end or marginally lower than that. 1 or 2 quarters of that kind of slower growth doesn't necessarily mean that the company is seeing a medium-term or long-term slowdown. I think some bit of that also can be allocated or can be attributed to change in product mixes that some of these companies have seen, partly related to slowdown in demand, consumption demand that we've seen. So wherever there have been autos or two-wheeler, four-wheeler or passenger vehicle slowdown in demand, some of those companies have got impacted. So I think it's temporary. Again, partly related, as you mentioned, to the higher valuations and for virtually the entire consumption space. Probably another 2 or 3 quarters, and as you see demand coming back, you could see some of these companies coming back, or stock prices coming back to their regular levels. Because one must, of course, appreciate that as opposed to fundamentals, corporate governance also in some of these companies have been fairly good, and which is also partly the reason they're getting higher premiums. That clearly hasn't changed in any which way. It's more because of growth expectations not coming up to scale, which is why you're seeing a bit of a wild down in some of these companies. So I think it's a matter of time. You could see a lot of these coming back to their original levels or going higher over a period of time.
Nipun, we'll leave it at that. Thanks so much for taking the time out and being with us today and giving us your thoughts. Appreciate your time. Well, the market, as we see, is up about 81 odd points. Manav, Chopra, I want to take a couple of ideas, checks from you before we take a break. Page Industries, the stock has lost another 4% today. What did the chart show?
The overall trend has been quite weak, Neeraj. If we talk about it, has been a consecutive 8 months of decline in Page Industries. Yes, the prices are nearing to its oversold levels, but there has been no respite. As the prices tends to form, has been consolidating, we eventually see a breakdown happening. So at the current zone, I sense at least in the near term, the prices would test the levels of 19,500, and that could be the level where some sort of a breather would come in. But at the current zone, one should not go for any bottom fishing into the stock and wait for actual trend reversal to happen. So at the current zone, we can just anticipate another decline of say 500 to 1,000 points into the stock since the momentum is still weak. But don't get into any bottom fishing until unless there is actual trend reversal that happens.
Okay, and Manav, just wondering, as we speak, just a few stocks which have gained quite well. Minda, incidentally, now is up about 12%, and watch out for Indocount. That stock has gained about 17%. But and a large portion of the move for Indocount happening in the last 45 minutes of trade. But the likes of HCL Info, which is up about 6%, and Crompton Greaves Consumer, which has gained quite a bit too. Those are the two names that I wanted to check with you.
See, HCL Info, again, it's a stock which has seen a series of decline, and this is something that it's bouncing after a very sharp fall of at least 70% from its recent peak. So even though if the prices bounce another 5-10%, it is something that I wouldn't recommend that one can idly go for any short-term trades. We've seen such kind of a bounce in HCL Infosys in the past, where it has eventually acted as a trap, and prices have the stock has again fallen. So I wouldn't recommend going longs into HCL Infosys at the current zone. And eventually, if given a choice, there are better stocks from the IT space, specifically like stocks like Hexaware or even HCL Technologies, where we are seeing some sort of a momentum coming up. So these are the stocks that I would suggest to be longs in.
Okay. Stay on, Manav, so much more to talk about. We'll take a very quick break on that note. On the other side of the break, we get you the Fab 4 stocks of the day. At 3:15, we tell you what dealing rooms are recommending in the session today, and then some closing strategies. Rahul Mohindar, of course, joins us on the other side. Stay tuned.
Fulfill your dreams of buying a new house, new car, or achieving academic success. Attractive interest rates and easy processing. The trust, commitment, and excellence since 1937. Indian Overseas Bank, good people to grow with.
Anything and everything about your investments. We're just a touch away. Monday to Friday at 12:30 p.m. only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there. There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that is sustained.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back to Countdown. 26 minutes left to go for market closing, and it's been quite volatile in terms of an intraday move on the index, and now at the high point of the day after cooling off. So we've rescaled 10,700 in style, and now 10,719 is where we are at, 114 points higher. Good contribution coming in from the bank Nifty as well this afternoon, and this just happened in a matter of the last few minutes. So really can't call as to what's been happening in the markets over these last few days. But let's take a look at Europe and see how that part of the world is trading right now, and whether or not any supportive cues are coming in from there. Yes, it's in the green, but no great shakes in terms of the quantum of gains that you're seeing across the board. Just about 0.25% on the FTSE CAC is down, up just 0.1% or so. Dow futures, that should be an indicator. That's absolutely flat. In fact, a slight negative bias is what we've got on the Dow futures. Let's take a look at what's made it now to Yash Upadhyay's list of the Fab 4 stocks. It's definitely difficult to pick and choose in such a volatile market, Yash, but I'm sure you've dug out a few gems for us.
Actually, Devina, there are lots of good stocks today. We'll start with the PSU banks, and they are in focus. So something like an Indian bank, that is up about 2.5–3% after Bloomberg reported that the government may infuse close to 47,000 crore rupees in 12 state-run banks. So watch out for that. Dixon Technologies is also up about 2% after the cabinet approved the new national policy on electronics, when the government aims a total turnover of more than $25 billion from the sale of electronics. Metal stocks are in focus as well. In fact, the metals index is the top performing sectoral index in today's day of trade. JSPL being one of them is up about 5%. And lastly, I want to highlight KPIT Tech. That one's up about 7%. Fresh longs coming in with high open interest build up of more than 21%. So watch out for that as well.
Okay, Yash, thanks very much for that. So quite an exhaustive market there in terms of whether you have to pick out the gainers there. But moving on, telecom is one space that's seen a lot of investments come in from foreign portfolio investors. But if there's one stock that's outdone the others in the BSE telecom space, it has to be Bharti Infratel. Sharad has got the details as to how foreign portfolio investors have pumped in money into this counter. Sharad.
Hi Devina, the foreign portfolio investors have increased their stake by around 37% in Bharti Infratel over the last 4 years, from a 6% stake to 43% stake, which is the most amongst its peers. In our analysis, we have taken top 5 companies by market capitalization in the BSE Telecom Index for the period of last 5 calendar years. As regarding its parent company, Bharti Airtel, the foreign participation in the company has been range bound between around 15 to 19 odd % in the last 4 years. In a stark contrast, foreign institutional investors have reduced their stake in Vodafone Idea by more than half, from 27% last year to around 13% as of now, as both Vodafone and Idea Cellular got merged in the financial year 2018, while Sterlite Tech and Tata Communications has shown a positive traction when it comes to foreign participation in their companies over the last 5 years. Till date, Bharti Infratel has actually risen by more than 90%, while the BSE Telecom Index is down by around 22% over the same period of the 5 calendar years. Back to you.
All right, that's Bharti Infratel, and that's the reason why one of the reasons probably that you've seen the stock move the way it has over the last few trading sessions. In fact, the last 2 or 3 trading sessions, Bharti Infratel has always stacked up right on top of the gainers list on the index. The last 7 days, though, not much of a move, 318 on the counter. Rahul Mohindar of Viratech Software is joining us on the show. Along with him, we'll have Mayuresh, Joshi as well on the fundamental side. But Rahul, I want to come to you first on the index. Just a few moments ago, we were somewhere closer to 10,650. Now we're comfortable at 10,730. Is it difficult to take a call on the index right now?
Not really. Good afternoon, first of all. Last week I mentioned that we are fairly negative on the market, expecting 10,600 levels, and we did see a fantastic slide. But again, as you come close to this 10,600, that broad range support comes in. So, what you're seeing is really something which is a corrective move up, a corrective bounce, if I may put it that way, in my opinion. Technically, we are set up negatively, and what we're seeing is after an 8 or 9 day continuous down dipping pattern, we are taking a bit of a breather. So I would rate today's move up not as a breakout. And there are 2 very clear reasons why I'm not calling this a breakout. The Nifty really needs to get past 10,780, 10,800 on a close before we even think of a short-term breakout. Secondly, most of the index heavyweights, whether I look at a Reliance, whether I look at an HDFC Bank, the volumes are well below the average volumes it usually clocks, and probably the volumes are even equal, if not slightly lower than the last 2 or 3 trading days. So my worry is this is an up move with fairly under average volume. This is an up move that's not taken out a lot of key levels, which is why my stand would be closer to 10,780 to 10,800. Those are points where you should sell the Nifty. We think we will head to lower levels, break these lows and move closer to about 10,500. To be more precise, 10,480 is the next support. So that's where we're probably heading to on the Nifty spot.
What about the Bank Nifty?
On the Bank Nifty too, our trajectory is negative, and again we've come to classic support. An ICICI Bank 335 to 340, very strong support. An SBI 260, very strong support. So this is what's giving the market, or rather the index, the Bank Nifty, its support. So we're at key support levels after a 7 or 8 down dip kind of session that we've seen. So all in all, 26,600 is where I peg the next target for the Bank Nifty. 27,100 being the key resistance. So I'll keep a stop loss above that and maintain my short stand.
Stock calls are a buy call on Apollo Tyre and you're selling Maruti.
Absolutely. We had a target last week of 6,800 on Maruti, which is already achieved. And we've kind of moved that target down to 6,520. We think that's the next short-term move you would see on Maruti. So 7,040 being a stop loss, I would sell Maruti. We're also bearish on Hero Motor, which is also declining. On the flip side, we like Apollo Tyres, and clearly because of the kind of volume breakout that we've seen here, we think short-term we will over the next 3 to 4 sessions see levels closer to 215 to 20 on this. So with the stop loss of 203, one could be looking at buying Apollo Tyres.
Wow. Let's wait and watch. Some of the auto ancillary companies today have done rather well for themselves. It's spread across. Minda is a case in point. Some of the tire companies are a case in point. So they've done okay for themselves. This morning we were talking about some of the upstream names, the likes of ONGC, etc. have done rather well for themselves. So good going. Let's see if this momentum lasts. All eyes, or rather one eye, definitely on what's happening to the Chinese yuan and the whole US-China trade conversation too. So keep that at the back of your mind. Just before we get to Mayuresh Joshi, want to pull up the European scene and what the European markets are doing right now before we get to a fundamental voice of Mayuresh Joshi. Just pull up FTSE CAC DAX and let's see what's happening at that end of the market. Well, some bit of green, not a lot, but some bit of green certainly being seen out there. 140 odd points now for the Nifty 50. Somehow can't take our eyes off that. Mayuresh Joshi joins us on that note. Mayuresh, good having you. Thanks so much for joining in. If you are a bull, then it's great news. If you are a bear, then would you believe this is a part of short covering? And what about the companies which are leading it? Today we see a lot of commodity names which are right up there, be it the metal names like Vedanta, Tata Steel and Hindalco, or companies like ONGC, HPCL, etc.
So afternoon, Neeraj. No, I think it's certainly a respite after what you've probably seen over the last 7 to 8 days. So to that bit, whether it's short covering, I think the data points at the end of the trading session will let us know. But again, a large element in terms of how the market moves have largely been, I think a lot of stocks within the broader universe have corrected quite significantly. And this is where you need to probably place yourself over the next 2 to 3 months. If there is continued volatility in the market, which a lot of participants feel, I think a few of the sectors should do well. So I think consumption is loosely defined as one sector which will do well. But within this, again, I think a few of the cement stroke infrastructure oriented stock, a few of the IT companies, a few of the capital oriented companies, which have probably reflected better numbers and have less leverage on their balance sheets, and a few of the NBFCs stroke financials. I think this is where our positioning is. So you might obviously see such bounce backs happening in possibly leverage names as well, in high beta names. But whether they last, considering market volatility, is a different question altogether. So I think investing in quality in any dip that you probably get over the next few days, weeks, I think is the better opportunity and a strategy going forward.
Okay. Well, clutch of names moving around. For example, in today's session, if we look at the broader end of the spectrum, then companies like Tejas Networks, for example, have done remarkably well for themselves. Big move today, big move over yesterday and today, by the way. Today up about 20%. Yesterday was doing reasonably okay for itself. So that's one counter that you got to watch out for. We already spoke about Indo Count having a good day. Minda Industries up a good day as well. So some bounce back being seen here. Mayuresh, any thoughts on any of these bounce back names?
So Minda is interesting within the auto ang space, and again I think the diversification that they've probably done over a period of time and the kind of investments that they're making in terms of the future product line, I think it's very, very interesting, and numbers have probably held up. So when you talk about the top line growth, how their margins have panned out, seem to be very interesting. So yes, I think Minda probably looks interesting from a medium to long-term perspective. Obviously, I think the slowdown that you're probably feeling and sensing in the market, I think that probably should reverse at some point of time. And as normalization starts happening, quality companies like Minda should hold out. So I think if anybody's holding on to Minda, clearly they should hold out.
Well, it's certainly rocking the charts right now. Minda Industries, let's wait and watch if this continues. But it's a good time to get a sense of what dealing rooms are recommending in this session today. The conversations, the nature of the conversation might be slightly different than what we've seen the last few days. Darshan and Yatin are here with their channel checks. Good afternoon, both of you. Darshan, let's start with you first.
Yeah, so one of the stocks that's been spoken about is Apollo Hospitals. Remember now, this stock has been in the eye of the storm given the fact that the promoter pledge did manage to increase and the stock did manage to fall. Dealers indicate that majority of the pledge-based selling may be finally over on the counter. It's managing to stabilize in today's trade. The other counter, which has fallen significantly, is down almost 2%. The last time I checked, it's almost 4% down, is Jubilant Foodwork. Dealing rooms do indicate there's a potential block deal that could happen in the next few days. The promoters may be looking to offload some bit of stake. That's the news that we've heard. And on the back of that, there is selling pressure that's been seen. And Lupin is actually managing to stay flat. It was down in trade, but some of the domestic mutual funds did highlight that there were sell flows in the counter. So that's what dealers have indicated. But Yatin?
Well, Indigo, that is one stock at the day's high, but dealers do believe that aviation stocks is something one should keep away from. Crude prices are rising, and on the back of that, plus the aviation data which has come out indicating slowing growth, dealers do recommend that Indigo is something wherein there could be weakness after the rally that we saw today. Apart from that, TCS is also one stock wherein dealers indicate that domestic funds are buyers in trade. Remember, the stock went down intraday and has managed to bounce back quite sharply. More importantly, recent correction of around 6 to 7% makes probable buy sense on the domestic fund flow side. And finally, Vedanta, that is one stock wherein dealers are recommending a buy today, sell tomorrow kind of a strategy. Metal stocks in general are showing strength, and Vedanta is one stock wherein dealers, on the basis of F&O trends, recommend a BTST.
All right, Yatin, thanks a lot for that. That's what dealing rooms are recommending this afternoon. Mayuresh, Joshi, lots been happening in the aviation space. And while we are taking a look at Jet on one side, the January data has come in slightly on the lower side at 9.1%, which is actually quite low in multiple months. What does it indicate for the industry as a whole?
So I think two things, Devina. One, I think the kind of numbers that have been posted by all aviation companies, obviously they did get affected by the higher ATF prices. And when one talks about the cost optimization ex-fuel, so if you look at their CASK factor ex-fuel, I think the cost per available seat kilometer has not come down substantially, which means that there is some amount of elevated cost push which is still being seen and felt in their numbers. The second element in terms of the realizations and their average selling price, I think the realization growth has been tepid both because of the competition intensity that the airlines are facing at this point of time. And largely, again, I think the yield movement has been constrained because of the inability to raise prices, and costs have largely moved up. Now, with crude prices moving higher, I think the sensitivity to earnings, as I've time and again pointed out, from two factors. A, I think the pricing of crude and how the rupee moves against the dollar clearly plays out in terms of the translationary nature on how the P&L numbers get reported. And even if you look at the numbers reported in the quarter gone by, I think there is an inherent pressure being felt. Now, you are entering into a very strong season for aviation companies in general. I think Q1 of the next financial year where the summer vacations probably fall through, will entail higher utilization levels. The load factors will move up as well. And there is a fleet which is coming through. So there is A320neos that probably come through for Indigo over the next few months. And again, what has probably got added even in terms of SpiceJet's fleets. But large element, I think, because of the uncertainty related to how these other factors move, specifically in terms of the EPS sensitivity, I think the cash flows also remain highly sticky and very, very lumpy. So again, I think the call here largely is to probably stay away at this point of time.
Okay.
All right, that's on the aviation sector as a whole. But just quickly get in some chart checks on Spice, Interglobe and Jet. Manav, let's come to you.
Yes, in fact, see the prices for the Indigo, it has been in a good uptrend, and recently after a good correction, the prices have also bounced from its support level. So if I have to pick one from the Spice and Indigo, I think for the immediate basis, 1130 is an important support for Indigo, and I would recommend that Indigo is likely to see a good move towards the levels of 1200. It has an important support at 1140, and even our short-term traders can look to initiate. The stop loss would be 1130 on the lower side for an upside target of 1200. And once if we see a break above 1200, we could see another swift move. The volumes are also confirming for the Indigo even at the current levels.
Okay. Closing strategies, it's 320, so let's do that. Manav, let me come back to you first. Your top closing strategy first.
Yes, my first buy call is on REC. The prices after good short-term consolidation has seen a good breakout on the daily charts and is closing above its important resistance of 125. We recommend a BTST in this for an upside target of 131 for a stop loss of 126. And my other call would be a buy on KTK Bank. In fact, from the banking space, this stock has seen a good bounce from its oversold levels, and we expect a short covering coming into this stock as it is bouncing from its oversold levels. It has a stop loss that we recommend would be at 111 on the lower side, and expect an upside target of 118.
Okay. Rahul, what about you?
Well, my first one would be a buy on Infosys with a 731 stop loss. I'd be looking at targets of about 755 coming. Another idea would be to actually look at a short position on Hero Motor, where we're looking at 2560 as a target. I'd keep 2650 for this call as a stop loss.
Okay, interesting. So, do watch out for Infosys. That's I think Nifty IT is an interesting one. The last 4 or 5 days it's been coming off. Today NASSCOM's guidance would have been an important barometer. Not that NASSCOM has said anything significant. There's selective bullishness in that commentary, but it's a bit of a bounce for the Nifty IT. Look at that chart, and that shows you a thing, doesn't it? 7 days down about 3%, but this is after the 2% up move today. The only part is what a lot of people are saying, that corrections in IT in such an uncertain market for the rest of the other markets don't last too long, and I think we've seen stark evidence of that. Large cap, mid cap, almost everything IT has done really well for itself. Indiabulls Housing Finance is now looking like ending as the top gainer on the index, followed closely by Vedanta at 160. It's a stock in news for a lot of reasons. CCEA, this whole disclosure and the corporate governance issue that hurt the stock badly. Mayuresh, lots brewing within Vedanta. The last 2 days, that stock and the group companies, all of them have done rather well for themselves. What's the call here? A Vedanta, Hinzing, or a Sterlite Tech?
So again, Neeraj, I think a large element of what has transpired, I think one really needs to wait and watch and understand how these events will probably flow through over the next few weeks. So I think not in a rush at this point of time on any of these counters, and a large element on how these counters might actually react on a macro perspective as well is how the entire US-China, I think, trade war tariffs are expected to move. So I think if they get some amount of a breakthrough on that front, The LME inventory levels, which I've been pointing out time and again, are at an observably low level. So I think you are probably looking at inventory levels remaining very, very low for the ferrous space as well as the non-ferrous space. So any respite on that count can be a huge sentimental uptake, both from an LEB pricing perspective and how these stocks might probably react. Till that point of time, my take is probably just to watch out and see what probably transpires over the next few days or weeks.
Okay, got that. The ADAG stocks, and while we are talking about big losers, that's the pocket which has lost out considerable ground in today's session. That bit of a pickup in the end for Reliance cap, but Reliance Communications is still down about 5%. Reliance Infrastructure was down about closer to 4.5%, now is down 1.7%. But nonetheless, this is a pocket that you would rather refrain from being in. Mayuresh, for most of the ADAG stocks right now, there is a big overhang. For investors that are already invested in it versus investors who are probably looking for an exit opportunity, what's the rationale and what's the call here?
No, so I have largely stayed away, so I think the call is going to probably stay that way. My own sense is that there are far better names to probably look in this market, whether within the large caps or the broader universe, because I think I'm sticking to three key themes. One, I think looking into the perspective of whatever happens post-general elections, I think the verdict that we probably give, and if it is a favorable one that the street probably looks at, what kind of reform processes can come through, which will give a direction to few sectors and stocks. So the key projects, the pet projects that this incumbent government is probably embarked upon, I think, where they can continue on that path. I think there are strong elements in terms of a huge boost for infrastructure stroke, capital goods stroke, cement stocks. The second element is the financial inclusion part of it. So I think the entire financial space, which has got badly beaten down, selective names can really do well over the next few quarters and few years. And the third element obviously is a few of the mid caps where the earnings visibility looks very, very strong in terms of either consumption trends or what probably happens in terms of how their balance sheet positions are. So I'm a strong believer of strong cash flows, less leverage on balance sheets, and where businesses are very, very easy to replicate, or rather very, very easy to be done by the promoter group, where they have strong moats and where competition is probably not existing at this point of time. So I'm better off looking at other stocks rather than this set of stocks.
Okay. Mayuresh, we'll let you go on that note. Thanks much for taking the time out and being with us today. Really appreciate it. Just final couple of questions from both our experts. Indiabulls Housing Finance is on a roll, and as I said, it's gained a couple of percentage points in the last few minutes of trade. Any trade here, Manav?
Neeraj, I will
you can't
not
answer.
be able to
Okay.
speak on the Indiabulls group of
Okay, I can appreciate that. Rahul, let me come to you on that. Indiabulls Housing Finance.
See, if we look at the, the first thing I'm going to do is look at the long-term aspect on this. Again, I'm not extremely positive on this one. So closer to 670 odd, there is severe resistance. So if we're really talking about short-term play, yes, we could probably move to that 670 mark. We're almost nearing that. But again, I'd really like to see that level broken out on a closing basis before I initiate a bigger trade on this. So immediately speaking, I would look at taking some money off the table closer to 670.
Manav, maybe you can answer Adani Power. Big move in the last few minutes of trade.
Yes, of course. In fact, most of the like Adani Ports and Adani Power, they both had seen a series of decline. Specifically, Adani Power, after a good short-term consolidation, is also breaking out from its daily charts, and the stock is bouncing from its weekly oversold level. So usually, when such kind of a formation does take place, we can expect a good follow-up move happening. Most importantly, the volumes are also in last couple of trading session is hinting for a good momentum in the near-term perspective, as there is a breakout on the daily perspective. I sense in the immediate basis, we're not surprised to see Adani Power close to the levels of 45, and even it can surpass 45 in the near-term perspective.
Stay on, German. We'll take in final thoughts from you, but quite unlike the last few days, we are ending very well today. 1% apiece for each of the three benchmark indices, which is great going. The mid caps and the small caps haven't done too badly either, and will come up on your screen. But this is a strong show by the Nifty. The broader markets too will come up on your screen, and about 1%. So it's been steady days, steady move throughout the trading day today, and we are ending at the day's highs, which is, or almost at the day's highs, which is actually not bad going. We'll speak about the broader market at length. Then I'll bring you up to speed with all that's happening there. Let me just quickly tell you what's happening in the large cap space first. Indiabulls Housing Finance, we just spoke about that stock up about 6%. A clutch of metal names have done very well. Commodities by and large, but metals. Vedanta, Tata Steel, Hindalco, Adani Port, of course, out there. There's Ultratech Cement, there's oil marketing companies, Gas Authority of India. Very strong gains, very few losers. So some part of short covering element also out here, I would reckon, and we'll get to know about it during the close of day today. But very strong show today put up by the large caps and lots of gainers, no specific pocket, and IT is not correcting today. It's actually doing rather well, which is also aiding the move. And Devina, it's quite something that without any support from financials, banks or NBFCs, we've logged in such gains today.
Yeah, it is a pretty smart comeback on the indices this afternoon, at least in the last half an hour of trade. After the Nifty started sinking, the reversal was pretty swift and stayed consistent towards the end of the trading sessions. And that's what's happened even in the mid caps and small caps. Both the indices in the broader markets have done relatively well, 1.17% higher on the small cap index, the mid cap index also doing equally well. I want to start off first with a few big movers, and the last few minutes of trade saw gains coming into counters like JSPL. You had a strong move coming in on that counter, 5.9% higher. You had a CG Power that did well. Tata Elxsi from the IT pocket. Once again, that stock slightly more contrarian to what the rest of the pocket has done, but today's session, stock's up 4.5%. Adani Power, the last few minutes of trade pushed it past that 40 mark, and you can see that climb that the stock has had in just the dying moments of trade, 10.5% higher. Within the aviation pocket, Interglobe Aviation does relatively well today. Metals, I already spoke about JSPL. SAIL also adds on to the gains. India Cement does well today. You have a Minda Industries. We spoke about it with regards to our Bloomberg Edge segment and how the stock is doing well and has got positive triggers on the Bloomberg charts. The stock 13.5% higher. Apollo Tyres is the other one that's done well. PTC India is the next one that's double-digit gains by the end of the session this afternoon, about 11.5%. Coming to some of the losers then, and the ADAX stocks on the back of the Supreme Court finding Anil Ambani guilty of contempt. The stocks are all down under in trade. So be it in Arcom, Reliance Infra, Reliance Cap, Reliance Defense, all of those counters being washed out. Imami profit taking. So you had that cheer of the stake sale of promoters in order to pare down their debt. Stock moved up 13%. Today's session, 4% under. Page continues to grind lower, once again down about 5%. And Jubilant Foodworks looks slightly more pricey. Stock's down about 3.5% in the session this afternoon.
Yeah, but all in all, a good day of trade. The question mark only is, has it happened on good volumes or no? As we said, while banks have done well, no big contributors in the top 10. But let's pull up the volume picture first and see what's happening. Penultimate day to the weekly expiry. A big jump in the F&O volumes, and the trend remains the same, isn't it? Cash
Since
market
yesterday,
volumes.
yes. Yesterday, I think it was closer to 8 lakh crores odd on the futures and options side, and now the pickup momentum is much higher. And this is a large number for even a non-weekly expiry a day. So about 10 lakh plus is definitely a big number to look at, and positive because it's come on a day where the markets have shut shop at the highest point of the day. So that's interesting. And let's quickly look at the contributors as well, and then we look at the advanced decline ratio in the broader market. That's Reliance Industries contributing the maximum, followed by Infosys, HDFC Bank and HDFC Limited, all heavyweights on the index.
Yeah, and interestingly, some of the top 4 or 5 names don't even find mention there. It just shows that it's been
under
on
1 point in terms of losses that you're seeing.
Yeah, well, so it's just very, very interesting that's happened out here. Okay, just the advanced decline ratio, as Devina said, it has to be in the green. Not a bad day. A bit of a widening in the market breadth towards the close, which is actually a pretty remarkable sign. And this is despite the world markets doing very okay. Final thoughts from our experts. Manav, Chopra, would you believe we can build on from where we are right now, tomorrow and going ahead?
Yes, absolutely. In fact, when we started our discussion some time back, I did mention that 10,600 is an important support zone, and since overall the bandwidth of this trading band has been 10,600 on the low side to 11,000 on the upside. So it definitely provides a very good risk reward ratio entry, and closing above 10,700 and above yesterday's high is definitely indicating a scenario whereby we could see a swift rally towards 10,850 and 10,950 on the immediate basis. Also for the Bank Nifty, if we see a close above 27,100, we could again see a good move of another 300 to 400 points. But one of the most important thing that we could see today is, I sense there is a lot of short covering that has taken place, and most importantly the breadth of the market was very positive today. So since the market has been oscillating in a broader range, I expect this move to actually go and test the upper band of the trading channel, and eventually it is going to provide a good risk reward ratio for any positional bet at the current zone.
Rahul, Mohindar?
I think what we'll definitely see is closer to that 10,800 mark. There will be some selling pressure at the same time. Agreed, we're in that trading band, 10,600 being the lower side. But again, the question is, can I look at the top 5, Nifty heavyweights and suggest that they're all going to rally? Something like a Reliance, we need to get above 1250, 1252. Something like HDFC Bank, strong resistance around 2150, 2170. So very key levels, which are there in terms of resistance for these heavyweights. I think I'd like to really watch 10,800 being broken out, watch a Reliance get past 1250, and HDFC go past 2150 before I jump to an upward conclusion. As of now, still reading this as a bounce back rally, short covering to some degree, but I think we might just throttle again at 10,800.
All right, gentlemen, we'll leave it at that. Manav as well as Rahul, appreciate you both taking out the time and joining us this afternoon. Well, with that, it's a wrap on this edition of Countdown. But before we end, let's take a sneak peek into the 5-day Aero India show, which began today in Bengaluru. Nishant Sharma brings you a snapshot.
I'm here at the Yelahanka Airbase at the outskirts of Bengaluru city at the 12th edition of Aerospace and Defense Exhibition Aero India 2019. Now, to put things in perspective, this year's Aero Show is going to see participation of about 600 companies, 400 from India and 200 globally, with about 61 jets are on display. Now, in this 5-day biennial event, we'll see all sort of sorties and acrobats. This time around, Aero Show will also be hosting a CEO roundtable, a startup marathon, and also a drone Olympics. And lastly, another key major highlights of this year's Aero Show is going to be, how the global fighter jet companies such as Dassault, Saab, Boeing, Lockheed Martin are going to make their pitch stronger as India looks to replace its aging fleet of fighter jets.